Okay, so good day traders, hope you guys are having a great time. Now it's currently the Easter season and I'm wishing you guys a happy Easter. Now particularly in this video, I'm going to be talking about how you can actually grow small accounts. Now this exact same thing that I'm about to share with you guys is what I've used to trade $100 accounts that I was able to flip it to a $500 account. By the way, I'm going to leave the video for you guys in the description of this video. Now there are two ways that you can actually flip an account. You can actually grow very aggressive or you can go passive aggressive. Now this is where the broker that you use actually play a huge role. Now what role am I talking about? Now I'm talking about leverage. Now leverage is the deciding factor of how many trades you can place at a particular time for a given account size you have. Now let me put it like this: for like 1:100 leverage, $1 in your trading account can do the work of $100. Now what this means is that if you're using a leverage like 1:3000, $1 in your trading account can really do the job of $3,000. Now there's a catch. Now when you're using a leverage like this, your account is going to be treated like a $3,000 account. Now this right here controls the risk of the account. Now I'm expecting that if you're watching this video, you've already traded. You're not a beginner that is coming to flip an account. No, don't do that. Now you know, whenever you try to place in a trade, your trade doesn't get in profit at first. Now let's say if somebody were to using like 1:3000 leverage and the person is trading like something like a $10 account, you understand, and the person is like maxing out that kind of leverage, within a few minutes of placing that trade, that account is already gone. Because if you're expecting like a little retracement from like a $3,000 account, you're expecting something like, let's say, a $30 drawdown or a $40 drawdown, $50 drawdown, or even $100 drawdown. Now the fact of using like 1:3000 leverage is something I'll consider as very aggressive. Now me personally, I don't recommend everybody to do this, because if you're not really careful, your account will really be gone in an instant. Now for me, if somebody were to ask me I want to flip an account and I'm trying to do it in the safe way possible, the leverage that I can personally recommend is the 1:500 leverage. Now let me give you guys a clear example of why I really picked this 1:500 leverage. Now I could remember sometime I was trying to trade like an $8 account. I was trying to flip an $8 account, and the particular leverage I was using on there was the 1:500 leverage. Now you know, as everything, whenever you place a trade, the market doesn't just go in a direction immediately. It's try to do a little bit of retracement before it start going into the direction you intended it to go. Now I remember I placed in like 3 positions using like 0.01 lot size in 3 positions. So if you combine everything, it's like 0.03 lots. And now I was holding the trade and the market made a little bit of a retracement. Now within that point, I got a margin call. Now a margin call is like a situation where the broker closes your trade because you're now taking more risk than your leverage actually allows you to. Now I got margin called and some trades were actually closed out. Now one trade was still remaining and I still have a balance that I could trade off of. But if I was to be using the 1:3000 leverage, that account would have gone. I think I'll be getting a margin call when the account is already totally wiped out, you understand? So within a few moments, the market heavily started going in my direction. Now since I know the market is now full on time going in my direction, I had to use this opportunity to place in more trade, and using the profit that I've made from this existing trade to place in another trade. Still the same thing, existing profits to place on another trade and things like that. Now that kind of leverage is exactly what I'm going to call passive aggressive. So this is something you should definitely know whenever you're trying to flip a small account. Now the two brokers that I know that I've used that are good with like 1:500 leverage is Forex Market and FXU. So you can pick either of the both, you're going to be good on that area. Now once you've already gotten your leverage sorted out, the next thing is what you're going to be using to attack the market, because the whole leverage and everything is defensive. Now the next one we're going to be talking about is being offensive. Now there are 3 main things that a strategy must have. Before you can call anything a strategy, it must have 3 main things. If it doesn't, then you need to work and reconstruct it. Now the first thing is the strategy should be able to show you a trend in the market, so you should be able to spot a trend with whatever strategy you're using. The second one is you should be able to spot support in the market, and you should be able to spot resistance in the market. Now with these 3 main things, you're going to be good in the market. Now by the way, the moving averages I use is the 25 moving average and the 9 moving average. So in essence, the red moving average is the 9 moving average, while the blue moving average is the 25 moving average. So if you're setting any of these moving averages, you can color it this way so I can best understand it. Now how I use this to find trend is that whenever price is above the moving average, is trying to signify that the market is in an uptrend, and whenever price is below the moving averages, like in this point right here,
it means that the market is in a downtrend. So it kind of helped me simplify when the market is in a trend or not. And also I try to find out support and resistance level where the market is reacting to. So let's say if the market were to be in an uptrend, the market hits, a resistance zone just like this. At that point, what I'm just going to wait is for price to, go below the moving averages. Now, I believe if you watch any video where I'm trading, you see me explain this thing in a more detailed form.
Now, the last thing I'm going to say here is that you don't need a take profit and a stop loss when you're flipping an account. You just have to use your eyes.